Hello and welcome to this live stream by DW Business. Wherever you are in the world, it is great to have you with us. I'm Rob Watts, I'm one of the presenters here at DW Business, and I am joined by our resident China expert, China watcher, China boffin. We've given him all sorts of titles down the years, Clifford Coonan. Thanks a lot for being with us, Cliff. We're here today to take your questions about what's the major business story coming out of China at the moment, the crisis at property giant Evergrande. It's something we've covered a lot over the last couple of weeks, and the response here on YouTube in particular has been tremendous. That's why we thought we'd give you the opportunity to put your questions to Clifford here. This is a great opportunity to ask a real expert on all things China related. Clifford has spent a lot of time not only living in China but also reporting on the country. He can offer real deep insight. So do write your questions into the chat window here on YouTube. We'll do our best to spot them and pose them to Clifford. Now, while you're here, why not hit the like button too and subscribe to the DW News YouTube channel. Now, before I kick off with Clifford, let's start with a look at the reason why we're here, the great crisis at China Evergrande.
Family homes of the future, or the bleak monuments to a spectacular business failure. These residential buildings in the city of Luoyang may never be finished. Construction had been moving slowly already. Reports of the impending crisis around Evergrande's gargantuan debt pile brought it to a complete halt. Those who bought apartments here for their families are worried that they will now never be completed. We've been here 3 times and saw that the construction site and the tower crane have not moved, so we came over to ask, and they told us that we had to wait for news. Are you worried when you see negative news about Evergrande? I'm worried. We all bought it ourselves with our hard-earned money. There are unfinished Evergrande projects across China. The company owes at least $300 billion. The crisis is causing panic in Beijing, with fears that a collapse could wreak havoc on the country's financial system. At the Evergrande Oasis property showrooms in Luoyang, the lights showcasing dazzling displays of ambitious property developments are still flashing. But the mood among Evergrande employees is disconsolate. Now we have a lot of layoffs here, and they worry that their wages will not be paid. Although the bosses have said before that layoffs do not affect wages, it's a question of how much time before they get paid after being laid off. Luoyang is known as one of China's 4 historic capitals, but today it is at the center of a very modern Chinese tragedy.
A modern Chinese tragedy, Clifford. I think for a lot of people, actually the past few weeks are the first time that they've heard about Evergrande. But when did you first find out about them?
Well, Evergrande in some ways is, the history of Evergrande is a bit like the history of China's economic explosion in the last few years. I moved to China in 2003 and very early on I became aware of the fact that the property was just the most incredible thing. I'd never experienced anything like it. There was constant construction. Everywhere you go, there's construction, massive construction sites, huge numbers of people moving from the countryside into the cities to build this urbanization that the world has never seen before. Yeah. So property is something that's kind of embedded in the whole China story. And everywhere you went, there was absolutely no second-hand market. Everything was new, new, new. And that's still very much the case. It's all new properties, new, new, new. Building in every city, like in Luoyang, like we saw in the report there. And in a lot of those places outside, the sign would say Evergrande, usually with Evergrande Oasis or Evergrande Paradise Villas, or they're always with these very grandiose English titles. So very early on, Evergrande featured in the sort of imagination in terms of how China was growing. And then we had a personal experience then around 2008, 2009, when we lived in Beijing. We lived in diplomatic compounds where basically foreign journalists are encouraged to live. But some, because they're guarded by the army, some richer or well-known Chinese celebrities also lived in there. And one of them was Su Jiayan, who was the the head of Evergrande, the founder of Evergrande. And this story about Evergrande's debt crisis has been coming back and forth over the years. And this was another case back then even, where workers hadn't been paid and the workers demonstrated and actually stormed the compound and the army had to intervene to stop them. So Evergrande, as a company with problems, with heavy indebtedness, has long been an issue. And those are the times when I really started to become aware of Evergrande as a company.
So when we talk about Evergrande, are we talking about one of the big Chinese brands? And in terms of property, the big Chinese brand?
That's right. I mean, it's the biggest real estate developer, and real estate accounts for 30% of the Chinese economy. So that just gives you an idea of the scale. Everything about China is about the scale. So when you've got a big property developer in China, you're talking about a seriously big company.
We have been getting a few questions in already. Thank you very much if you've sent one in to us. I've just heard from Samuel Piat. Excuse me for mispronouncing your name there. What's going to happen to property speculators who own apartments in unfinished buildings? It's a good question, isn't it? Because we're talking about millions of unfinished properties that may never be finished, may never end up in the hands of the people who've paid for them. So what happens to those people and what happens to their money?
Yeah, and it's a very good question. There's about 1.4 million properties in this situation they're talking about, which is a phenomenal amount of people when you think about it. This is, in my opinion, when we're talking about what's going to happen with Evergrande, I think it's going to be some kind of state intervention to prop up certain sectors of the economy. I don't think they're particularly interested in saving Evergrande, but they are particularly interested in stopping these hundreds of thousands of investors who have given money to Evergrande for properties that Evergrande was supposed to use to build these properties which aren't built and which is now clearly gone. And I think that causes incredible social problems, and that's something the Chinese government, the Communist Party, does not want. So I think that's what's going to happen is there's going to be some way to ensure that small investors are protected from the major fallout. So it's going to be a bit of a piecemeal solution, and one of those pieces will be ensuring that these hundreds of thousands of investors are protected.
I mean, is there a genuine prospect of people ending up without somewhere to live as a result of this? People who perhaps lined up a property to move into it and now they won't be able to, they'll never get the keys.
I think if that's allowed to become a big problem, I think it becomes a problem for the Communist Party. And this is something that's really important to understand, is that the Communist Party is not really interested in how the market works. It's interested in the political dimension. Its main driving force is staying in power. And in order to do that, it has to ensure that it honours the social contract, which is that if people support the party, they will guarantee a better economic growth, a better lifestyle, a moderately prosperous society. So I think if anything goes against that, I think there's going to be trouble. And I think one of those things is these hundreds of thousands of small investors who want their properties.
Yes. So it looks bad for the Communist Party of China if this happens. One of the questions that I'm seeing for people is, for example, from Zoe Dew here saying, will the CCP, the Communist Party, bail out Evergrande or allow it to collapse? It doesn't sound like they're likely to allow it to collapse.
No, but I don't think it's going to survive in its current form because the level of debt is too huge in some ways. And the party, despite the fact that China has grown very much in the last few years, the party has no way of it can't just print money. What it will do is, I think, ensure these social contracts are honoured. But it's hard to see that this, because it doesn't fit with the ideology about moderate prosperity. The levels of indebtedness go against the whole ethos of the way China, the Communist Party, is now pushing the economy. It's moving much towards centrally planned, with a lot of state influence, and that doesn't sit easily. That sort of almost private sector levels of debt don't fit with that model. So I think what's going to happen is that they will find some way of rescuing aspects of the company, perhaps by nationalizing them, turning them into Chinese state operations, for example. I think that's a very real possibility. And then other parts of it will be allowed to fail.
Right, so we're not looking at a full bailout here. What we're looking at is a forced restructuring.
I think so. Yeah. I think that's it. I mean, the thing is, information is not. You don't get great information from the Communist Party. They're not going to tell anyone what they're doing. So this is just going to be. We're just going to have to watch, and it's going to come out like that. But I think there's going to be some kind of structured, forced restructuring. Yeah.
And what's the situation with the housing market in China at the moment? I mean, we've had a comment from someone called the Accent Man saying, well, if housing prices never fall, wouldn't that mean that the Chinese people will have to, quote, literally pay the price because of how expensive it is? Is it getting too expensive? Have we got a property bubble in China?
I think so. I mean, in a way, we've become addicted to Chinese growth. And this is a market that for 25 years, pretty much since, I mean, you can trace it right back to Deng Xiaoping, the previous leader who said to get rich is glorious and introduced all the reforms on which the expansion of the Chinese economy is based. You can go back to that. But say for the last quarter century, property has been a big thing and the prices have risen constantly. They've never fallen, except for obviously, freak incidents here and there. But generally, the trend has been upward the whole time. So that means that there's a lot of people who just they've no comprehension of their house being worth less. So the ramifications of that are huge.
Yeah, I mean, could we reach the point where property prices do top out and start to fall, and suddenly, there's a generation of people who've never seen that, more than a generation.
Yeah.
And they're left having to deal with a completely new style of economics, which is one that deals with property prices going down.
Yeah, absolutely. I think that's it. I mean, if you look at the basic principles of supply and demand, I mean, there's something like one estimate I was reading recently says there's 90 million, there's enough empty property to house 90 million people in China.
So that's all of Germany.
Yeah,
wow.
Basically, yeah, and add a half, Switzerland as well, and so that's a huge amount of supply. So technically, if the laws of economics are allowed to be followed, then you've got massive oversupply, which would mean prices have to come down. What that would mean?
House purchases are actually going down as well, aren't they?
Yeah.
I think that they're 20% down on what they were.
That's right.
A year ago.
Yeah. And I think some of that is possibly down to COVID and the impact of that. The economy is slowing. A big factor is demographics, that China is getting older. And so all those people coming from the countryside, that whole process of urbanization also drove as well as being workers who built the apartments, it also drove the process of urbanization. And that's slowing down now because it couldn't continue at the pace. Right. So the market is slowing down, and that has huge ramifications then for the broader economy.
Yeah, especially got fewer younger couples getting married and buying their first home. It's going to make a big difference. Let's see what other questions we're getting. Oh yeah, we've got a few questions that are about Evergrande's involvement outside of China. I mean, we've spent a lot of time here trying to work out how to say the name of China. Yeah. Evergrande. Is it Evergrande? Is it Evergrande? We've settled on Evergrande because they do have this European style name. Mm-hmm. How far out do their tentacles reach beyond China?
Well, I think maybe the best way to look at it is, when we talk about contagion, where Evergrande's overseas operations really have an impact is going to be on the people, on the bondholders, the people who've lent the company money from overseas. And
right. Actually, we've got a specific question from Daniel Groth actually saying how are banks in other countries involved with Evergrande? Yeah,
I mean, they've just lent them money, and we saw the other day that Hong Kong has asked its banks, even though Hong Kong is part of China, the banking sector is still separate. They've asked their banks to say what their exposure is. I think we're going to see a lot of that in other countries now. People are going to say, how much do you owe? As at the moment, it's not clear what the exposure of individual banks, of all the banks is. We've had a couple of individual banks saying they have exposure, and it's a lot lower than the exposure within China itself, but it's still significant. So I think this is going to be something that becomes a big factor in the coming weeks, because we've got just under a month before Evergrande will be in default of a lot of these things. At the moment, it's, they've missed their deadline for paying back some of the money, but they've 30 days before they become in default. So That means for some of these, you're talking about in 3 weeks' time, and then we're going to see who the banks that they owe to, and a lot of these. A lot of the default issue is the exposure of the foreign banks. I don't think the foreign banks are going to be high up the list when it comes to a bailout or any kind of bailout. I think they're going to be. It's going to focus very much on the domestic banks and the state-owned banks. So I think the foreign exposure is going to be very interesting to watch.
One of the tangible effects beyond China that we've seen, as much as the stock market is tangible, is the effect that it has had on stock markets around the world. Why is the crisis in housing in China having this global impact on investor confidence?
Well, this is very interesting, and I think it's like when we said in the report about talking about a tragedy. This is the problem with Evergrande is that it's indicative of an overall slowdown in the Chinese economy, and this is something that people are very, very worried about because it is. Actually, for the last couple of years, it's been the only engine of economic growth, especially during the coronavirus pandemic, because it came out first. But just like we've become so used to rising property prices, we've become addicted to Chinese growth. And if that growth isn't going at a high level, then that's going to cause problems overseas. So I think that's why it's almost like it's more than symbolic because it's $300 billion.
Yeah.
But it also, the wider ramifications are that it has impact on the economy. And if you look at some other things we've had in the last few days, like we had the power problem with power cuts in industrial areas in the north and also in the southern part. This has also fed into this narrative that the Chinese economy may be slowing down, and this is going to impact on investors because people are used to just China growing like weeds.
Yeah. Just a reminder to anyone who's joined us in the past few minutes what we're doing here. This is a DW Business live stream with me, Rob Watts, and Clifford Coonan, our China expert. We're taking your comments and questions, so do pop them into the chat log to the left-hand side of this video. Is it left or right? I have to work that out. Well, you know what I mean, either way. And we are putting them to Clifford. Clifford, we were just talking about the Chinese economy, and actually this is coming at a bad time for the Chinese economy in general, isn't it? We talk about perfect storms all the time, but the Delta variant, for example.
Yeah, I mean, because China has a zero tolerance policy when it comes to COVID. So even though there's a very small number of cases of the Delta variant there, they tend to just shut down whole sectors of the economy. So a lot of goods aren't getting into China because ports are closed. There's all these different things happening at once. The power sector is in trouble. And the demographics thing is worrying people. The fact that China is aging is a big factor, I think, in how people are looking at growth going forward. Because the thing with demographics is, with developing countries, the aim is you do what Japan did. That is, you get rich before you get old. And that's always the thing. But if you get old before you get rich, then you've got a huge problem. In China, because of the one-child policy for such a long time, the dependency ratio, that is, the number of people who will have to support people in their retirement and in their old age, is very, very high. And that's going to be a big problem in 20, 30 years. And also you don't have the young people to work in the factories. So you have to look elsewhere for growth. So there's a lot of anxiety, I think, about the Chinese economy at the moment. And a lot of the anxiety has been also focused on debt, the fact that a lot of this is built on borrowed money.
Right.
And because when you're talking about 1.4 billion people, everything in China has scale. If everyone, it means that people kind of get used to big figures when it comes to things like debt. But eventually, those debts have to be repaid.
Right.
And if you don't have the young people who are there, it's usually the young people who have to pay back the money borrowed by the previous generation. And if they're not there, then there's a real problem.
There is this tricky, wider economic backdrop to what's happened at Evergrande, but is this a problem of Evergrande's own making?
Yes. I mean, I think in some ways it's maybe a question. I mean, a lot of people are talking about hubris, the fact that it flew too close to the sun, like in Icarus.
Yeah.
That Xu Jiayan was such an explosive figure, in himself. He was such a grandiose Evergrande figure himself, and the founder. So I think it's there is an element of that it was. They just didn't see the warning signs coming. I mean, it's just the levels of debt. There's almost like a Ponzi scheme element to it as well. That the idea of borrowing to keep borrowing more and paying back borrowings with interest with borrowings and borrowings, and it was just a cycle of borrowing that was just, you knew it wasn't going to end well.
Well, thanks for your questions, guys. If you want to send any more into us, please do. We've heard from all sorts of experts during the course of the crisis at Evergrande and over the past few weeks, including Clifford here. But here's what some of the others have had to say to us.
And if the company is able to meet short-term interest payments this week, there are a number of key dates that are going to come over the next few weeks and months that where there are similar questions will arise.
I can see it being chopped up, either sold off piece by piece. Something will be arranged. It's a matter of how long the Chinese government's going to let this process play out.
I do not think that we will see contagion in the financial markets spreading around the globe. This is not a Lehman Brothers moment. The Evergrande problem is basically a Chinese one, and the foreign investors are not involved in this problem to a very high degree.
We've got to get beyond this idea that Chinese leaders are some sort of fabled, economic wizards. They're not. They make lots of mistakes, and they're forever having to clean up messes.
Few views from experts there. Let's return to our own expert, Clifford Coonan. Questions coming in. One we've got from Joshua Chapman is, could there be benefits for other countries such as South Korea, Taiwan, Japan in seeing China fall, or is it just bad for everyone? And I suppose they're talking about everyone in the region there.
Yeah, this is a big question. It's hard to say what's bad and good in this sort of situation, but you can certainly see what sort of impact it will have. South Korea, countries like Vietnam, for example, are already picking up a lot of manufacturing business as China's economy changes from sort of low-level manufacturing and moves up the value chain. I think part of it is because the geopolitical aspect comes into this as well, is that some people see that China has been quite aggressive in areas like the South China Sea, and that's led it into conflict with South Korea, Japan, pretty much all of its neighbours actually. But its economic strength means that it's been able to outweigh those political concerns by contributing to the economic growth in these countries. If China is suddenly unable to do that, well then these other countries are going to be much more strident about how they feel about regional issues, and China seeking to dominate the region. So I think that's how that would play out, I think.
We're just seeing pictures from the protests that we've had outside the HQ in Shenzhen. A lot of people feel they're going to be really suffering from this crisis. Many more losers involved than winners, aren't there?
Yeah, I think so. These pictures, it's always kind of amazing to see pictures of protests in China because it's so strictly controlled. But actually, there are quite a lot of protests in China. They tend to be resolved very quickly. For years now, you haven't had any lengthy protests against anything. But the one thing is that if people feel that they feel very aggrieved clearly in these. In Shenzhen, for example, where they've been demonstrating, there's definitely a feeling that they want the government to intervene and they want to be helped. So I think that, yeah, definitely.
One of the pictures that I really remember, and I don't know if we're able to show it, it might come up at some point, was one of the execs at Evergrande being berated. He was curled up in a ball on the floor outside of the HQ, for presumably unable to get in. Do we often see the faces of this company, and it seems unusual to see someone being held to account in such close quarters in China?
Yeah, it's true. That is kind of unusual. You see it occasionally. You used to see it a lot when the property boom started. What drove the property boom and what drove, in many ways, economic growth in China that we've seen over the last 25 years was that local governments sold land or leased land to property developers near the big cities. And then they built villas and they built all this process of urbanization. But in the process of doing that, they had to kick people off the land. So property has always been tied up with protests in China because when people didn't want to leave their houses, and this was a big thing through the sort of late 90s, early 2000s, up until very recently. A lot of the developments for the Olympics in 2008, for example, there were a lot of protests there because people were kicked out of the old parts of Beijing to make way for these huge Evergrande constructed properties. So yeah, it's definitely there's a big link between the rampant development of the property market and protests in China.
Actually, a question that's come up a few times from Zoe here, and like I say, a few people have asked the impact, whether this is going to be contagious for the whole Chinese property market, because you can imagine that there could be winners in the Chinese property market in terms of their competitors from this debacle.
Yeah, that's very interesting. I mean, the way I'm, again, looking at the supply, I mean, one of the things, talking about the 90 million vacant properties and these ghost cities, I remember a few years ago going to one of these so-called ghost cities, and it was incredible. It was a whole city, basically, and that could house 120,000, 130,000 people, and it was completely empty. But everything was there, including an ATM which had money in it. Now, this was right, exactly right, and it just blew me away. And at the time you look at it and you think this will never fill up, but within a few years that place was completely full up, and they were already expanding. So a lot of these, every time we call the ghost cities and the vacant properties, saying, "Oh, it's going to lead to the collapse," we've kind of been wrong. So that's why I'm a bit hesitant to say that this is, signals the end of everything. I think that I think there will be an adjustment. I think a lot of this is going to lead to a different attitude to debt, because it's clearly unsustainable. And as the government moves more towards centrally planned, heavy state involvement in every decision, they're not going to get away with those sort of levels of debt. So I think if you've got a well-run property company in China, you're probably in a very good position. The question is, how many well-run property companies are there in China? And that's a very difficult one to answer.
We talked about this whole situation not looking particularly good for the Chinese government, the Communist Party. We've had some questions asking whether or not the Chinese Communist Party might seek to distract from what's going on. For example, let me see, Gutes Brot, presumably somewhere in Germany, likes their bread, says, will the CCP engage in conflicts to distract people from the economic downturn? So they're talking about the broader downturn, but that strategy of distraction, is that something we have been seeing with Evergrande?
I think it's a very interesting question. I think what we're seeing by way of distraction, I think conflict might be going a bit far, but the big fear is Taiwan. And there's been a lot of what we've seen as the economy is slowing down. The government has been relying on nationalism and patriotism and encouraging people to be patriotic and turning everything into a campaign and, focusing on Chinese tradition, on China's strength, China's rising power, all of these areas. And that's focused very much on Taiwan, which is the self-ruled island where the nationalists who lost the civil war that put the communists to power, they fled there. And it's now self-ruled, but it's not independent. It hasn't declared independence, and as long as it doesn't do that, China's quite happy for the status quo to continue. But recently, it's been mentioning perhaps that it's time for reunification and hinting that there might be force involved. This happens every few years, so it's hard to know how much to put into it. But that kind of distraction is very much a possibility, if distraction is the right word, that, use patriotism, use perhaps reunification with Taiwan. And given that the US and has pledged to stand by Taiwan, that conflict could quickly spiral. So it's something that's very much that we need to keep an eye on and see how much of this is just talk and how much of it could actually potentially spill over into real conflict.
We haven't heard much talk from the Chinese government as regards to Evergrande. We don't actually know what they're planning. We have rumours, but we have, in the weeks that this has been rolling on, heard an awful lot from the Chinese government about tech firms and cracking down on computer games, usage of TikTok. Why is the Chinese government so focused on that when people might think that it should be more focused on this impending disaster in its property sector?
Yeah, I mean, this is This is an interesting one too, because I mean, there's been nothing about Evergrande in the media. Everyone knows about it, but anytime it goes on social media, it's the sites are shut down, or those particular aspects of the discussion are shut down. So instead, they've been focusing on not having effeminate men on screen and trying to limit the number of hours that children can play video games. Which is of course popular with parents, but this sort of restricting of freedoms, but in a kind of a paternalistic, that the Communist Party is looking after you. And this is very much tying in with the way that Xi Jinping's government is going, that it wants to center all life on the Communist Party, that the whole economy is centered there. But beyond the economy, this is part of the big, broad social contract that we may mentioned earlier, that in return for following the Communist Party, we will give you a great life. And it has this very conservative approach to what counts as a great life. And limiting freedoms in the interest of what it sees as the common good is very much of a part with that kind of opinion.
Okay, thank you, Clifford. Just a reminder of what we're doing here. This is a DW Business live stream. We're talking to our China expert, Clifford Coonan, about the Evergrande crisis in China. We're taking your questions and comments. Please do keep them coming. You can pop them in the chat box on this page. Clifford, we've had a question from Blackman UK saying, zero internal controls, piling $300 billion debt on one company's balance sheet, and nobody saw the red flags until the last minute? Yeah. Disbelief here.
Well, absolutely. I mean, this is one thing that most China watchers have been saying for some time, that this was unsustainable.
You saw this coming?
Yeah. And a bit like the subprime mortgage thing, I think anyone who was really looking at it felt there was something didn't feel right back in 2008. And it's the same here with the Evergrande, and no doubt others that will be affected. It was clear. The problem has always been that, again, the scale of China means that the market had this incredible ability to sort of, these vacant properties that you've had at different intervals down the years, they've all been filled, and the market has kept growing. So when you've got a population of 1.4 billion, 300 billion doesn't look as big. I'm not in any way offering an excuse for people not to notice it, but I think somehow people just presumed that it would sort itself out. But the excesses were too much. It just felt wrong. Maybe it's my sort of European, living in Germany coat, or hat, where I'm sort of saying that maybe, you need to, if you're going to borrow money, you need to have something to back it up with. But there's no checks and balances. Exactly. I mean, it was just and a lot of other sectors this happened in too. I mean, tech is another area. There's a lot of these. There's a big clampdown on tech, as you mentioned earlier. I mean, that's something else that we can talk about. But it's, I think some people did see it, but nobody seemed that worried to do anything about it.
The Chinese economy obviously is unique. Had a question from Shrey Chanana saying, is it the current strict policy for foreign businesses and more controlling in the financial sector and a lot of corruption and bureaucracy? Is all of that together creating holes in the Chinese economy?
Yeah. I don't know. I think one thing is interesting, I mean, on this issue, is like Chinese companies looking for money overseas. If they look for a listing, say, in New York, now they're changing the rules that they have to show more of their balance sheets and give more information about their figures. But for a long time, they didn't. So pretty much anyone could list in New York because they knew there'd be a huge take-up of Chinese stock offerings. And then foreign companies operating in China, they also operate under very specific rules, quite tough rules. Very, very few are allowed to have a majority ownership. A lot of these things, which, as long as the economy is growing very strongly, is fine. But I think that where the question, and as I'm interpreting the question, I think what's happening is as the economy slows down, those rules are suddenly shown up. That suddenly, if you're not getting the big earnings out of China, if you're not getting the big profits out of China because the economy is slowing, why do you need to put up with all these rules and restrictions, for example? I think people are starting to look elsewhere. I mean, we spoke a minute ago about about how other countries might benefit. But, you know, if you can go to Vietnam, for example, where you might have less strict rules, although Vietnam is maybe not a great example, but because it also has similar rules to China in a way. But if you can look elsewhere in the region, where you can get the big growth still and maybe work in a more free environment and be able to move your money around. I mean, moving money out of China is very difficult, for example. You know, there's a lot of restrictions there. So I think these holes in the economy are definitely becoming apparent as the economy starts to slow down.
Yeah, I mean, talking about the sort of way in which this crisis reflects broader on the Chinese system, the Chinese economy. James Diamond says, in what manner is what's happening a discrepancy with China's overall philosophy regarding socialism? I suppose, is the departure away from socialism, which we've seen, the only way that this could have happened?
Yeah. I think what's happened, in many ways, I mean, there's been definitely a return to core Marxist values under Xi Jinping. Some people are saying it's like Chairman Mao, that it's a kind of a Maoist thing. But I think it's, you know, politically, China has always had the same principles. But in order to prop up the economy and to keep the economy going, it had to act in a capitalist way. And I think there's a feeling that the economy is reaching a stage now where they can kind of rein it in. So the discrepancy, if anything, happened in 1979 when Deng Xiaoping said to get rich is glorious and people started going out and investing and building factories and buying property. And in some ways, it's almost like to correct that discrepancy now. This is in terms of how the Communist Party leadership is thinking, that this is now the time for them to do that.
What about knock-on effects? We've got a question from Heavenly Templar. Which sectors of the Chinese economy are likely to be the hardest hit beyond real estate?
Yeah. This is an interesting one. I think tech, I think, is one area that has been growing very, very strongly. And it's going to be hit by the slowing economy, I think, because a lot of this focus on moderate prosperity in China is aimed at the domestic market. You've got the thing called the dual circulation system, which aims to grow the economy by exports, but also on the internal engine, which is getting people to buy stuff in China. And that's been what's propping up the economy very much, particularly since the coronavirus pandemic. And I think if the only way for a lot of people save in property, it's their only saving. Their apartment is the only saving they have because there's not much of a pension system. And so property is incredibly important. And if that's suddenly worth less, you're going to be focusing on your retirement or your health payments. You know, people will sell apartments to pay for health or, you know, these kind of things. You're going to be focused on those things rather than thinking about buying the latest iPhone. Although, that said, we had pictures yesterday from queues, thousands of people buying iPhone 13s. But yeah, so it's. I think they're going to be. I think that's the way it's really going to have repercussions. Is that people will see their savings getting less, and so they will buy less consumer goods. They'll buy, and that will feed into tech, I think, in particular.
I just want to zoom in again into Evergrande itself. This is a company with its fingers in so many pies, an awful lot of different sectors that it's involved in that go far beyond property development and even into the world of football.
A world-class soccer stadium is set to be built here in Guangzhou. Highly indebted Evergrande plays a big role in its construction. It even owns the Guangzhou FC soccer club. In the midst of the group's looming debt crisis, the Italian coach announced his departure. Evergrande says that everything's running as planned, at least on the building site, but locals are skeptical. From what I saw, there are fewer builders here than in June. Were there many people before? They used to have hundreds of workers. Now there are very few. It's such a big construction site. The world's eyes are on it. How could the biggest soccer stadium in the world not be finished? It won't become a wasted construction site. The government won't let that happen. According to inside sources, the government is pushing state-owned real estate companies to take over parts of the ailing group. Just recently, China's central bank signaled its support for the private investors that are owed millions by Evergrande. They're afraid that if the group collapses, their money will vanish with it. Part of the problem is that the real estate developers sold high-yield investment products to raise money for borrowing, circumventing regulations and piling up more than $300 billion in debt. The Chinese government says it fears a knock-on effect for other industries.
You're watching this DW Business live stream with Clifford Coonan and me, Rob Watts. We're talking about the Evergrande crisis. We saw there, Evergrande owns a football team. That will surprise people. Why does Evergrande own a football team?
Well, this is a really interesting one. I mean, about 2015, 2016, I remember watching the Asian Champions League, and at that stage, that was when Guangzhou Evergrande was really on the rise, and they beat a Qatari team to win the final.
Right.
And it was Jack Ma, who's the head of Alibaba, who's also been in trouble recently, as we know, and hasn't really been seen now for months. And then it was Su Jiayan, who was the other co-owner. So the two of them had this team together, and they had sponsorship from a Japanese car maker, which they just completely ignored, and they put their own sponsorship on it. And they were it was a moment in history, a moment in Chinese corporate history where these were the two, they'd alternate with who was the richest man in China, in those days. And their ambition knew no bounds, and Evergrande was going into electric vehicles as well as the football stadium and the football team, and then they started planning the biggest football stadium in the world. It was huge ambition and hubris there. So it's just part of the tycoon thing, and these people are incredibly powerful and incredibly influential, and a lot of that then ties into why, in some ways, that Evergrande is in trouble.
Xu Jiayin and Jack Ma, they're friends, right? I mean,
That's right.
there are photos of them enjoying a drink together, enjoying the football together.
Yeah.
People are asking why Jack Ma hasn't in some way stepped in to help.
Well, nobody knows where Jack Ma is right now. In some ways, there's been about 6 sightings since he made a speech criticising the Communist Party back in October. Exactly. Only one of them is a confirmed sighting, and people are still not sure if that's a realistic one. So he's basically been taken out of circulation. Xu Jiayan is much lower profile in terms of than Jack Ma, but he's still pretty high profile. I mean, and he loves the luxury life and stuff like that. But that whole tycoon model in China runs very much, I think in some ways the party saw the level of influence that these people have and just wants to stop it because it's too risky. The party is always about making sure that you don't have other organizations that threaten your position. And clearly Evergrande and Alibaba and other property companies like Wanda, which was also a very big property company that was getting into film production. It was, and the CEO of Wanda, Wang Jianlin, was also very, very high profile. He's also gone underground. So there's a lot of, there's been a big clampdown on the tycoons, and I think a lot of it is down to the notion that the party is the only tiger on the mountain.
Yes, and Xi Jinping is the main tiger, the top of the mountain, right?
Yeah.
We did have a question earlier, and I'm sorry, I've been trying to scroll through to find it. Apologies to whoever put it forward, but they wanted to know whether this crisis could have any impact on Xi Jinping's prospects of being re-elected.
Yeah. Well, the thing is, Xi Jinping abolished term limits recently. A few years ago, which means that he came to power in 2012.
Yes.
Normally, he would leave next year, but he's not going to, and because he's put himself into this position. And so, but a lot of people now are saying that because the economy isn't going so well, that other factions within the Communist Party are perhaps thinking about maybe trying to remove him. He's certainly not going to get things all his own way in the way he used to. So it could actually undermine his position very seriously because he's put so much on himself now. which, a lot of it is because he's hugely popular and, and he's done a lot to resolve corruption in China, and he's Xi Dada, he's the father of the nation. But by doing that, you also put yourself into a vulnerable position. There's no successors around. No one knows who will take over after him. And the factions he has, to get to where he is, he's angered quite a lot of people within the party too. And while their power is weak for now, if he starts to lose support within the party, then we could see that it threatens his position.
An interesting question from Vincent W. here. It's, will the Chinese social credit system be impacted by the default, or just the Chinese economy? I suppose it's worth pointing out what the social credit system is.
Yeah, that's the social credit system is a system whereby you get points for being a good citizen mostly. I mean, if your credit score is good, but if you do things like you book a flight ticket and you don't pay for it, then you can't fly anymore. You get enough sort of marks against you. So it's kind of like an expanded version of the credit system, because it's also kind of rewards good citizenship. But it's it could be threatened because, again, it goes back to the fact that so many savings are in real estate.
Yes.
And if people aren't able to access their savings, it becomes harder. If people start going into debt because of this, So
it essentially causes a spiral, right?
Yeah.
So they go into debt in the first place. They're punished for going into debt by their social score going down, and then they can't get credit.
Yeah. That's right. It is a spiral, and I think that must be frightening for a lot of people.
Thank you once again to everyone who's been sending in messages. It's great to get them. We're putting as many as we can towards to Clifford Coonan here. Will this crisis spill over into the European and North American real estate markets? That's from someone called Product Reviews on YouTube.
Yeah, I mean, insofar as a lot of money coming into the real estate markets is coming from China. Chinese investors are buying up properties in North America in particular, and in the UK and also in Europe. So I guess in mainland Europe. But I think there will be some spillover. I'm not sure whether the whole question of indebtedness is as big an issue with the European real estate firms. I don't think they're as highly leveraged.
Right.
But again, these are sentiment indicators too. If there's sort of a discomfort, there can be contagion.
I mean, is it part of the fact that Evergrande's been able to exist in a sort of vacuum? Not a airtight vacuum. Vacuum has to be airtight, but that means that this has been able to happen. But it ultimately means that it can't spread that far outside of China.
I think there is an element to that. I don't think the contagion, beyond the exposure of the banks, the foreign banks, which is considerable, but I think there is that aspect to it. It is a bit of a vacuum there. So maybe the spillover effect will be more in terms of things like the supply chain or broader economic things that a slowing Chinese economy will impact. But in terms of specifically the real estate market, I wouldn't think so.
Question from Emre Kojak. Isn't the fact that we can't trust any number coming out of China a problem here? For all we know, there might be 100 Evergrandes in China. And this is one of the big questions, isn't it? If we know about Evergrande, but how many more are there?
Yeah, that's a very good question. First of all, maybe just split it up a bit. Data reliability in China has always been an issue. What we've always done, particularly we're seeing it now with the power outages, that people are reporting they've been told to cut emissions. So in order to cut emissions, they're just making sure that they meet the figures, that they meet the data by just stopping power supply. So, and in the Great Leap Forward, you had people faking data all the time. I think data has come a long way in China, but still most analysts don't really trust it overall. But I think what they do say is that it's reliably inconsistent. It's consistently unreliable. You're still comparing like with like, even if they think that GDP, for example, growth rates inflate the real figure, or that the yuan's level, the level of the currency is artificially low. It's consistently so you can still kind of get an idea. But yeah, most analysts definitely treat Chinese data with caution.
Yeah, we've had a comment from Anil Singh saying China never shows its hand publicly, just like with their COVID numbers. Not a lot of faith in any of the figures coming out of China.
Yeah, I mean, there's no free media and there's no way to expose this. I think that's been this is what's going to happen, and so there's a lot of mistrust about the figures, and so I think that's one thing that you have to be careful. But as I say, we can still get an idea of the direction things are going. I mean, you see it on the ground in China that the economy has performed incredibly well in the last 25 years, but then there is this feeling, looking at all these buildings going up everywhere, that this somehow can't be sustainable.
Another question, if I can. Yeah. Who we got? Yeah, John Smith says, first it's Evergrande, now it looks like China's high-speed rail network is getting shaky because of too much debt. Is that something that you've heard about?
It is. I mean, it's slightly different because the high-speed network is a rail network is a state project. But it is possible, though, that there might have been over-investment in it. I mean, it's an amazing system. When you travel in China, you can go from Shanghai to Beijing so fast, and it's quicker than taking the plane, and it's been amazing. But it's now kind of everywhere, and there is possibly that there's over-investment. There also the problem that's going to come forward, maybe this relates to this, is that there's a lot of pressure on the Chinese government to invest in infrastructure to keep the economy ticking over. So you could see overinvestment in some areas just to keep economic activity ticking over.
Okay. One of the questions that we've heard being asked is Evergrande too big to fail? Have we come to a conclusion on that, or do we have to see what Beijing does to really get the answer to that?
I think in some ways, it's not like Lehman Brothers. I mean,
that's the big comparison that's being drawn, right? It's the Lehman Brothers moment.
Yeah, I mean, in some ways it is, because it's an example of a massive, important entity that's been brought to the brink of collapse. But because the interest in making sure that it doesn't collapse, even if it changes the way it looks completely, because those interests are so strong, I think that it probably isn't too big to fail. That it probably is too big to fail, sorry. But the question, this also relates to the question about the impact on power in the party, for example. I mean, is the question people now are asking, is the Communist Party too big to fail? I mean, this could easily spill over into that, So I think that the too big to fail thing.
What would the failure of the Communist Party look like?
Well, if for example, a large sector of the population suddenly feels that it's not getting the returns, if its savings start to diminish.
Yeah, I'll just read you a question that we've had there, because I think it just fits it from Zoe Deu. Will the eventual slowdown of Chinese economic growth cause the people to revolt or overthrow the CCP, given so many current bans and restrictions on multiple industries, which cripple economic growth?
Yeah, I mean, there's been a lot of theorizing about this recently. There's been books coming out about a China possible coup.
An actual popular uprising? Is that really possible?
Yeah. The system of control that China has over the population is like nothing we've ever seen. And at the moment, by stoking patriotism and nationalism, it's keeping the people on side. But I think that for a lot of people, issues like air pollution, I mean, for a lot of the 15 years I lived in China, the smog was appalling. And if people think that their children are being harmed because of economic growth, I think they're going to put their children first, and then the savings thing. If you lose your savings because of, because your property values start falling, and there's no social fabric there to support you, then you're also going to be unhappy. So it could be that the combination of all these elements could come together, that there could be some kind of move against the party. But quite how that will take. How it would take shape is very hard to predict.
Yeah, I mean, it could be some way down the line, but a few more instances like this where people are seeing their money disappear, because one of the characteristics of the past decades has been people getting richer. They haven't really known losing money like this, have they?
Yeah, that's right. I mean, I always, I remember one time I had a Chinese friend, and we were, I was buying a toy for my son in a shop, and she was saying, "Oh, that's we never had that," and she was very well dressed, very sophisticated, and she was a 30-something woman, but she had nothing. She had a generation where once a year they got meat, so
right.
And so that's still in the Chinese memory, that the actual economic growth has been incredibly fast. It's been the biggest story of social change the world has possibly ever seen. So once you compare those sort of things, that people know how far they've come, but they have to make sure that it continues, that this situation continues to the next generations. And so when you have big debt stories like Evergrande, I think somewhere it must really rankle with people.
Okay, thank you, Clifford. Just another reminder of what we're doing here. This is a live stream from DW Business. We're talking about the Evergrande crisis in China and putting your questions to our China expert here, Clifford Coonan. Let's just get another reminder of the reason why we are here, the great crisis at China Evergrande.
Family homes of the future, or the bleak monuments to a spectacular business failure. These residential buildings in the city of Luoyang may never be finished. Construction had been moving slowly already. Reports of the impending crisis around Evergrande's gargantuan debt pile brought it to a complete halt. Those who bought apartments here for their families are worried that they will now never be completed. We've been here 3 times and saw that the construction site and the tower crane have not moved. So we came over to ask, and they told us that we had to wait for news. Are you worried when you see negative news about Evergrande? I'm worried. We all bought it ourselves with our hard-earned money. There are unfinished Evergrande projects across China. The company owes at least $300 billion. The crisis is causing panic in Beijing, with fears that a collapse could wreak havoc on the country's financial system. At the Evergrande Oasis property showrooms in Luoyang, the lights showcasing dazzling displays of ambitious property developments are still flashing. But the mood among Evergrande employees is disconsolate. Now we have a lot of layoffs here, and they worry that their wages will not be paid. Although the bosses have said before that layoffs do not affect wages, it's a question of how much time before they get paid after being laid off. Luoyang is known as one of China's 4 historic capitals, but today it is at the centre of a very modern Chinese tragedy.
Very modern Chinese tragedy. Clifford, just explain to us how Evergrande has got to this point.
Well, basically, it's almost like a Ponzi scheme where people have been where the company has been borrowing to pay interest on other borrowings.
Right.
So it's just been a cycle. I mean,
Borrowing from Peter to pay Paul. Yes.
Exactly, which is never a good move in business. And clearly, the scale with which things picked up, and I mean, I think the coronavirus pandemic has played a role in accentuating perhaps the problems that the company has. But the problems have been there for a long time, and people have been saying for a long time it's too much debt. It's over-leveraged, and it's so similar to previous bubbles in this, which are all basically based on being over-leveraged, and taking too much money where there isn't any value there. So I think that's basically how it got to this stage.
Yes, whether it's buying a brand of bottled water or a loss-making football team, I suppose. Is Evergrande the tip of the iceberg? Is it the first domino to fall? Is there going to be more Evergrandes?
I mean, there's a lot of debt in China. There's a lot of local government debt. So on the state side, this is something else that, that's another possible crisis in the offing, because the local governments have run out of land to sell, and now the property companies, the real estate companies, don't have any money to buy it. So this whole aspect of the economy, which is around a third of the economy, is under serious scrutiny right now, because China needs to find some other way of growing, which isn't based on real estate. Because it's cyclical, it just keeps going around in circles. So I think that's going to be a big factor. And where is this other area of growth going to be? Manufacturing has changed to the point that, it's moving up the value chain. You have to focus on the domestic economy and look to the domestic economy for growth. But again, it goes back to property, because if people's savings are diminishing, they won't be buying goods. So there's a real structural issue at the moment, which is been kind of accelerated and thrown into the limelight, I think, by the almost collapse of Evergrande.
And just before I get back to some more of the questions from the people that are watching at the moment, let's just put this major question to you, which is the Chinese government going to step in to save Evergrande and its many, many creditors?
I think it's going to step in some form. I don't think it's going to tell us that it's going to do it. And I think the main thing will be propping up small investors and anything related to the government. I think it's going to let the private sector work itself out because that's not its primary concern. Its primary concern is stability and ensuring that its role as the single party ruler of China isn't brought into threat. And I think if that is brought into threat, they'll definitely intervene.
Question from Steve Ho. Fueled by greed that the prices will increase forever. If you've lost all your money and still owe 3 generations of debt, the question will be, I don't quite understand what they're getting at there, but the end of the question is, has China got the same bankruptcy laws as the West? What does it mean for the people involved in Evergrande if it goes under?
Right. Well, that's I think the fueled by greed thing is certainly a factor, but a lot of it is that it's the only way that people can invest. The stock market you're not allowed to invest overseas. The stock market is very limited and tends to be focused on institutions. So individual investors, they do have, some of them do, but most people don't have a way of investing in the stock market. So it's always been property. So even though greed is a factor, definitely, a lot of it is just people trying to find some way of increasing their money and putting their money somewhere safe for the rainy day, be that for health or for retirement. And then beyond that, though, what was the second part of the question? It was
whether the bankruptcy laws are the same in China.
Yeah. And how it will impact on the individuals involved. I don't think it's going to end well. Looking at what happened to Jack Ma, I mean, for years there was this in China. There's been this wealth list, and a fair few of them end up in jail. And there's people are very slow normally to put their head above the parapet, because people try to keep a low profile. The smart tycoons try and keep a low profile. These are the hundreds of companies that were mentioned in one of the earlier questions. Maybe there's hundreds of other Evergrandes. Yeah. There's people, I'm sure, who are doing it who just don't have any public profile whatsoever, and it's very, very safe course, I think.
Yes.
So the bankruptcy laws, they're quite different and they're quite complicated, and everything is kind of politically driven anyway. So they are pretty much whatever the Communist Party says. And I think it's definitely going to be, for the individuals involved, I think it's going to be a very challenging time.
We've seen the impact that it's had on global stock markets over the past few weeks. It's been one of the drivers that's been forcing them down. The Evergrande share price has obviously lost 70-80% of its value over the recent months. And also the tech crackdown in China has made investment in Chinese companies seem less attractive, because at any point it seems like the government can just drop in and kibosh the whole thing. A question from Clyde Martin Aquino. Will Evergrande's crisis prevent future Western investors from investing in the Chinese market?
I think it's certainly going to be a wake-up call to a lot of people about whether they actually, they'll have to question, first of all, how safe is their money. I think how the foreign investors are dealt with is going to be a big factor. I think some investors are always going to be in there because they have to be in there because the China market is so huge. So people who want part of the China market are going to be going there anyway, I think. Like the German car makers, for example, the German chemical companies, they need to be in there. They don't have any option as far as they're concerned. But investors, speculators are going to find it much riskier. They're going to, I think, look elsewhere in the region. They're going to look at the Asia-Pacific region, for example, which is also showing strong growth and has opportunities and a very different set of rules. So I think it's going to, again, expose some of the shortcomings in the Chinese system. That means that it's maybe not as attractive an option. And again, a big factor is how much the foreign banks come away with from whatever rescue package or whatever package emerges from this.
Is the Chinese government likely to prioritise domestic investors over foreign banks. Is that
Yeah, I think very much so. Most of the money is owed to Chinese state banks. We saw today how it's...
Yes. So what's happened today? $1.5 billion dollars raised by selling a 20% stake in a Chinese investment bank to pay their debt to that very same bank. Have I understood that?
That's exactly what it is. And I think we're going to see a lot more of that. I mean, it's, again, it seems almost counterintuitive, but it means that the elements, Evergrande has bought in exchange for its monetized a lot of it. It'll have to monetize a lot of what it's bought as stakes in state banks, for example, or other lenders or other institutions that it has done in exchange for capital to build these things. It's going to have to sell them. So the overall value of the company is going to go down in a big way as well. I mean, it's even the fact that the shares dropped 80%. It's kind of hard to understand how the share is still trading, even. But
we've had a question from Yannick Bratt, maybe Janik Bratt, sorry about the pronunciation there. Are these issues, Evergrande, energy shortages, which we're seeing in China at the moment, electricity shortages, etc., are they a byproduct of China's rapid economic growth?
Yes, I think so. I think the energy shortages are very interesting. This is because the price of coal has risen so much. And also China has a problem with Australia, where it used to get a lot of its coal. It's basically in a trade war with Australia at the moment, so it's not getting supply from there. So it's a shortage of supply. But overall, it's the fact that China's economy is running so hot right now. They just don't have enough energy to supply the factories. And this is, of course, going to have a spillover into our lives, because people won't be able to get iPhones at Christmas, or the Christmas goods, for example. A lot of them are being manufactured now.
Sure.
And, you're going to see problems with the supply chain.
Oh, if there's one thing we've seen over the past few months, it's the impact that shutdowns in China can have on broader supply chains. We're talking about this, how this has a broader impact. Victor Del Mastro has said, will the current energy crunch in China, what we're talking about here, the shortage of electricity, will that accelerate the collapse of the Evergrandes of China? So not just Evergrande itself, but these others that we think may exist as well underneath the water.
I think so, because I hesitate to use the word perfect storm, because we do probably overuse it, but it's another one of the factors, isn't it? It's a big factor. Energy, you've got oversupply, property. In key areas of the economy, suddenly there are negatives appearing, and again, we've gotten so used to Chinese growth. As I say, we're addicted to Chinese growth. We're not used to things going the other direction. The COVID, during the start of COVID, when the economy contracted, it was a novelty, but everyone knew that was a black swan or whatever, that it was technically a one-off. But now we're seeing things for structural reasons where the economy is slowing, and I think that's a real worry.
Okay. For anyone who's just joined us, we're actually nearing our end yet. We've got a few minutes left, but you can submit your questions for me to put to Clifford Coonan, our China expert here at DW Business. Thank you very much for being with us so far. Another question here from A's Wine. It could be as a wine. I'm sorry, my pronunciation is probably terrible on all of these. But the question is, what's the downside if China bails out Evergrande? So it seems like the obvious thing for the Chinese government to save this company, given the reputational damage that we've discussed already. But what's the downside of that happening?
Well, I think were it to happen it's happening. The US bailed out the banks in 2008. I think it's partially because, first of all, it encourages bad practice, in a sense, like quite a moral dimension to it. But it basically it'll undermine overall confidence, I think, in the Chinese economy, because, in some ways, if clearly the property sector, the real estate sector, is in desperate need of a shake-up, of reform, and by a bailout, unless the bailout takes that into account, then it's just basically putting the problem away, sort of kicking it into touch, and it's just going to expand and get worse. So I think that's why a bailout. A bailout would solve obviously a lot of short-term headaches, but China really needs to address the fundamental issues here, and otherwise the problem is just going to get worse and worse.
On a potential bailout, Pepe Silvia has said, will the CCP, the Communist Party, absorb Evergrande assets into state enterprises, and will they allow foreign investors to buy stock in these joint-owned companies like other state companies? So could these properties ultimately end up in foreign hands?
I think it's very possible that's what will happen, that they will be absorbed into state-owned enterprises. I think it's very unlikely, though, that foreign investors will be allowed in, because things are very much moving away from foreign investment having a bigger role in China.
How big are foreign investors, how much involvement do they have in the property market anyway? I mean, how much property in China is owned by overseas organisations?
It's kind of hard to quantify, in some ways, because you do have a lot of mutual funds and that which would invest in the stocks, the listed stocks of the Chinese property companies. But really, there's a problem with direct ownership is really frowned upon, because there's so many strict controls of how foreign investors can behave in China. You still have the joint venture rule, where you can only have 49% of a company, with a few exceptions, including Germany's BASF and Volkswagen, who have actually got majority stakes in a couple of their plants in China. But generally the rule is that foreigners are kept at arm's length. And actually, just on this, it's one of the areas that we've seen a lot of debate about, because European companies complain that they don't have level playing fields in China, and this is one area where foreigners are kept out of things like infrastructure projects, for example. They can't tender for those, and as Jörg Wuttke, who's the head of the European Chamber of Commerce, said, how a Chinese company almost bought his local airport in Germany, but there's no way a German company could buy an airport in China.
Yes.
So I think against that kind of backdrop, I don't think you're going to see this leading to any kind of major opening up to foreign investment.
I reckon we're only going to squeeze in maybe one more question, Clifford. From Merla Basker, can ordinary middle-class Chinese afford the real estate prices? Or has the real estate price moved beyond even the middle class there? I mean, we know prices are rising. Have they risen that high?
The thing is that they basically can't. But they have to. People are very heavily leveraged, but the prices in the big cities have risen. They're rising in all the second-tier cities too. So it's certainly become more challenging. On the other hand, because it's the only way it's the main way to save money, I think you've seen a lot more focus on that kind of investment. So it is tough for middle-class people, and particularly if the property prices start to fall, as could very well happen now. But it's a question of how that plays out in terms of social stability.
Right. So actually, a crash in some property prices coming down might help some Chinese, but unfortunately not those who've got properties that have been built by Evergrande. We're very low on time now, but I just wanted to ask you, as we look forward to this story, it's far from over, where are your eyes looking? What's happening next? I'm
looking to see at domestic demand now. I'm looking to see if this starts to, if this is going to have a big impact on people, the amount that people are spending. Given that, inflation is also on the rise, there's a lot of factors that come together. But the domestic market and domestic spending, people shopping, going to the shopping malls, how that's going to be impacted by all of this, because then the Chinese economy could be in real trouble.
Okay. Well, Clifford Coonan, thank you so much for fielding the many questions we've been sent. I can only apologise to anyone who's sent in a question that I haven't had time to put it to them, but to him. We do appreciate all of the questions that you have been sending in to us, and that is all for this time on DW Business's live stream about the China Evergrande crisis. Thank you very much for watching and sending your comments. This stream is going to remain up on the DW News YouTube channel, so you can also go back to the start if you didn't see it. There's plenty we talked about if you only joined us in the last sort of 15-30 minutes. We got in a good hour and a quarter, Clifford, which is a quarter of an hour longer than we said, so we squeezed every inch out of you. My thanks to Clifford Coonan, China expert, for fielding the questions. how can we find you online, Twitter, if we want to?
Yeah, on Twitter is usually the best way, at Clifford Coonan, so one word. And yeah,
Okay.
always happy to answer any questions that I can.
Let the tweeting commence. I've been Rob Watts. Thank you very much from me as well. And until next time, goodbye.